The S&P 500 is climbing, but are cracks starting to show beneath the surface? Jason Hunter, JPMorgan's technical strategist, breaks down the key support levels and seasonal risks that could shape the next big market move. If the S&P 500 breaks below its critical support, will investors see it as a buying opportunity or the start of a deeper correction?
September.
Barely.
Yes, but as we roll into September, things do change, and seasonally September to mid-October is the period where the market comes under risk. So what we're watching right now are how the market trades through August. I think it's going to be range-bound above that 6,200, but I'll watch how the internals trade and how other markets trade and decide where we go from there.
The market has taken on an interesting character. Beyond the mega caps, which always get the spotlight and suck a lot of the oxygen out of the room, lower quality, high beta stocks have kind of filled the gap at any need in this market, and it's kept it resilient. Does that go away? And if that does happen, is that one of the things that pulls one of the legs off of the chair?
Yeah, that's exactly what I'm watching now. If you look at the most shorted stocks, as you said, the high beta, that really took off like a rocket in late June, and really for most of July, it was to the upside. What we're seeing now is the AI thematic tech, the normal heavyweights, the Mag 7, those charts still look okay and they're still moving to the upside. But when you look at some of the higher beta indices, the individual names, those are starting to show a little bit of a topping pattern. So I'd watch for rotation to quality, to your traditional defensives. Mag 7 for right now is quality because they make solid earnings.
You think they're also defensive in some regard?
In a sense, right? For someone that started in the early 2000s, it sounds bizarre.
I know it sounds crazy,
but
Mag 7 that's kind of what they become.
Yes.
You can actually, investors have really been playing both sides of the ledger there. Play a little offense, and you can play defense when you need to.
That's exactly right. And now as rates look like they're starting to trend a bit lower, especially after the payrolls report, maybe some of the other defensives like utilities, staples, healthcare start to do better as well. That will be another warning sign as well.
What about, industrials by a smidge are like the best performing group year to date. Financials have had a good run as well. What role do they play in this conversation?
Financials kind of fit in with the high beta as far as the chart pattern is concerned. They look like they've topped out a little bit on a short-term basis. As the other markets, especially after payrolls, have moved back to the highs, financials haven't gone with them. They're kind of consolidating the mid to the low end of the recent, very tactical trading range. And industrials, I would put kind of right there with tech, because a lot of the industrial strength has been part of the AI theme.
Well, we were
the
just talking about that, right?
Yeah.
And power and utilities and things like that.
Yes. Yeah. So that's traded oddly with technology, and if you look at the industrials index, it still looks like it's kind of in acceleration mode, a little deceleration, but not as much as the broad market scene right now.
Been asking all day the buy the dip mentality. It certainly has worked. There was some indication last week by some data, I think even out of your firm, that maybe the retail investors getting a little bit tired of buying the dip. You suggested if you do go below that resistance level, and even if it maybe goes a little bit further than that you should be an aggressive buyer.
Yeah, so if you look at that 6150, 6200, the medium-term support below that is down at roughly the 5800 and a bit below there. So that's more or less a 10% pullback from the peak. I'm guessing if we do get September, October weakness, that's about as far as it's going to go, and that should be solid support. That's where the market broke out from after the brief basing period that we had in April. And really, I believe it was when we shifted tact on the China trade policy and lowered those tariffs. That's where the market gapped out from. That should be support for the market as we go into the fall.